Preparing for Accounting Associate at Bank of America interview. You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Walk me through the 3 financial statements and how they connect. The 3 statements show performance, position, and cash. The income statement starts with revenue and expenses, ending in net income. Net income flows into retained earnings on the balance sheet after dividends. It also starts the operating section of the cash flow statement, where non-cash items and working capital changes are adjusted. The ending cash balance from the cash flow statement must tie to cash on the balance sheet. While answering, focus on the income statement, balance sheet, and cash flow statement. Explain net income, retained earnings, cash movements, and why accuracy matters in a banking environment. Question 2. Why do you want to work as an accounting associate at Bank of America? I am interested in Bank of America because accounting here supports a highly complex regulated business where accuracy and controls directly matter. As an accounting associate, I would get exposure to reconciliations, journal entries, reporting timelines, and cross-functional teams. I like roles where the details are important, but also connect to the bigger financial picture. Bank of America's scale would help me develop strong technical discipline and professional judgment. Make sure to cover your interest in accounting operations, exposure to a large financial institution, Bank of America's scale, controls culture, teamwork, and desire to build technical and analytical skills. Question 3. How would you record an accrual for an expense incurred but not yet invoiced? An accrual records an expense in the period it is incurred even if the invoice has not arrived. I would debit the relevant expense account and credit accrued expenses or another liability account. For example, if $10,000 of consulting work was completed in March but billed in April, March should include the expense. When the invoice arrives, I would reverse or true up the accrual and ensure the final amount is supported. In your answer, talk about the matching principle, debiting expense, crediting accrued liability, reversing entries, supporting documentation, and reviewing the accrual once the vendor invoice arrives. Question 4. What steps would you take to investigate a reconciliation difference? I would first identify the exact amount and period of the difference, then compare the general ledger to the source report or bank statement. I would look for timing differences, missing journal entries, duplicated transactions, mapping issues, or items posted to the wrong account. If the item is aged or material, I would document my investigation and escalate it. The goal is not just to clear the break, but to understand the root cause. Be sure to mention comparing source systems to the general ledger, timing differences, missing entries, duplicate postings, aging items, documentation, escalation, and maintaining a clear audit trail. Question 5. Explain the difference between cash basis and accrual basis accounting. Cash basis accounting records transactions when cash is received or paid. Accrual accounting records revenue when earned and expenses when incurred, regardless of cash timing. For a company like Bank of America, accrual accounting is essential because it better reflects economic activity and supports generally accepted accounting principles reporting. For example, interest income may be earned before cash is received, and expenses may be incurred before invoices are paid. While answering, focus on timing of recognition, revenue and expense matching, why large institutions use accrual accounting, and how accruals provide a more accurate view of performance. Question 6. How do you ensure accuracy when preparing journal entries under tight deadlines? I use a consistent process. Understand the purpose of the entry, verify the support, confirm the accounts and cost centers, and check that debits equal credits. Under tight close deadlines, I still perform reasonableness checks against prior periods or expectations. I also make sure the entry has clear documentation and approval. Speed is important, but in accounting, a fast entry that lacks support can create bigger issues later. Make sure to cover preparation discipline, supporting schedules, account coding, reasonableness checks, prior period comparison, approvals, documentation, and balancing speed with control requirements during close. Question 7. What internal controls are important in an accounting operations role? Internal controls help ensure transactions are complete, accurate, authorized, and properly recorded. In accounting operations, important controls include segregation of duties, preparer and reviewer sign-offs, account reconciliations, system access controls, and approval thresholds for journal entries. In a bank, controls are especially important because volumes are high and regulatory expectations are strict. Good controls reduce operational risk and make financial reporting more reliable. In your answer, talk about segregation of duties, maker-checker review, reconciliations, access controls, approval limits, documentation standards, exception tracking, and why controls are critical in banking. Question 8. Tell me about a time you found an error in a financial report or accounting schedule. In a prior project, I noticed an expense schedule did not tie to the general ledger by a small but recurring amount. I traced the difference to one vendor invoice being coded to the wrong department. I corrected the schedule, flagged the coding issue to the team, and suggested adding a department-level check before submission. The immediate error was fixed, and the added review helped prevent repeat misclassifications. Be sure to structure your answer using situation, action, and result. Emphasize attention to detail, analytical review, communication, correction, and preventing the same issue from recurring. Question 9. How would you explain a variance between actual results and budget? I would start by quantifying the variance and identifying whether it is favorable or unfavorable. Then I would break it into drivers such as timing, volume changes, pricing or rate changes, reclassifications, or one-time expenses. For example, if technology expense is above budget, I would check whether it relates to higher headcount, accelerated project spend, or invoices booked earlier than planned. A good variance explanation should be specific, supported, and useful for decision-making. While answering, focus on isolating drivers, comparing to budget and prior period, separating volume, rate, timing, and one-time items, and communicating the business story clearly. Question 10. What is a bank reconciliation, and why is it important? A bank reconciliation compares the company's cash records to the bank statement and explains any differences. Common reconciling items include outstanding checks, deposits in transit, bank fees, interest, and errors. It is important because cash is highly sensitive and must be reported accurately. In a financial institution, reconciliations also support control, liquidity visibility, and early detection of unusual activity or processing issues. Make sure to cover matching cash book records to bank statements, outstanding checks, deposits in transit, fees, interest, errors, fraud detection, and reliable cash reporting. Question 11. How do debit and credit rules work for assets, liabilities, equity, revenue, and expenses? Debits increase assets and expenses, while credits decrease them. Credits increase liabilities, equity, and revenue, while debits decrease those accounts. Every journal entry must balance because accounting uses double entry logic. For example, if the company pays cash for a $1,000 expense, I would debit expense and credit cash. Understanding the account type is the key to getting the entry right. In your answer, talk about normal balances, increases and decreases by account type, double entry accounting, and using journal entry logic rather than memorizing isolated rules. Question 12. How would you handle a request from a manager to post an entry without adequate support? I would handle it respectfully but carefully. I would ask for the required support and explain that journal entries need documentation for review, audit, and control purposes. If the deadline is urgent, I would work with the manager to obtain reasonable evidence quickly, such as an approved calculation or invoice backup. If support still was not available, I would not post blindly and would escalate through the appropriate process. Be sure to mention professionalism, control mindset, asking for documentation, explaining policy requirements, avoiding unsupported postings, escalating appropriately, and protecting financial statement integrity. Question 13. What Excel skills are most useful for an accounting associate role? The most useful Excel skills are the ones that make reconciliations and analysis faster and more reliable. I would highlight pivot tables, XLOOKUP or VLOOKUP, SUMIFs, if statements, conditional formatting, filters, and data validation. I also think clean workbook structure matters. Clear tabs, source data, formulas, and checks. In accounting, Excel is not just about building formulas. It is about producing a file someone else can review confidently. While answering, focus on practical accounting uses: pivots, lookups, formulas, data validation, reconciliations, error checks, formatting, large data handling, and explaining results clearly to reviewers. Question 14. How do you prioritize tasks during month-end close? During month-end close, I prioritize based on deadlines, materiality, and dependencies. I would review the close calendar, identify entries or reconciliations that feed downstream reports, and complete those first. I also track open items so reviewers know what is ready and what is pending. If a late adjustment comes in, I assess its impact and communicate early. Close is a team process, so visibility and timing are just as important as execution. Make sure to cover close calendars, materiality, dependencies, deadlines, communication, status tracking, reviewer availability, and balancing recurring tasks with urgent exceptions or late-breaking adjustments. Question 15. Describe a time you worked with another team to resolve an accounting issue. I once worked with an operations team when a reconciliation item remained open because their transaction report did not match the ledger posting. I set up a short call, walked through the transaction flow, and asked them to explain the source timing. We found that one file had been loaded after the accounting cutoff. I documented the timing difference, cleared the recon item, and agreed on a cutoff check for future periods. In your answer, talk about cross-functional communication, understanding source data, clarifying ownership, documenting conclusions, staying calm, and showing how collaboration improved the accounting outcome. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some hopeful content. Do not forget to like and share this video. Your small act can do great things for us.